What's happening, traders? What's good? Welcome back to my YouTube channel. And on this video, I'm going to share with you a trade idea I got from yesterday's trading during London session. That's Monday, the 20th of February 2023. I'm on the DXY chart. So why am I on the DXY chart? Well, most of you that know how I trade, I do make my analysis. I do take most of my analysis from the DXY. That's the dollar index, because already you know the dollar index, or the dollar, the currency, the US dollars is basically the most traded currency in the world. So I make my analysis and I do my analysis there on DXY, and then I use that as a navigation to other pairs, because the pairs that I trade are EURUSD, GBP/USD, and AUD/USD. AUD/USD being my favorite. I wanted to trade EURUSD this week because there are a whole lot of news fundamentals on EURUSD, and I know for sure there will be opportunities for me in the market. Not to waffle for long, this is what made me take the trade. Now, this is a 1 hour time frame on DXY, so I'm holding a long-term bullish bias on DXY. And this is basically what I saw this week. So this line here is basically a period separator that I have on my chart, and this is basically Monday's trading. If I want to apply this period separator again, we've already started today's trading, which is Tuesday. So I'm making this review on Tuesday, like the next day. So Tuesdays are already started again. So this is Monday. You get me? This is Monday, and this was Friday. So now what I saw was a graph of Friday's low. Remember, our setup literally forms after liquidity has been taken. So after the liquidity has been taken here on the DXY, I expected that the next place price will definitely target or go to will be these areas on the chart. This is buy side liquidity, this is buy side liquidity. So price will be navigating towards this area, and also if you can look further, you would see imbalances in price on chart. You see a fair value gap here, and you also see a fair value gap in here. So there is a whole lot of things attracting price at some point. You get what I'm saying? There's a whole lot of things. So once that liquidity was grabbed, I was expecting this line here is a long-term level that I want to be taken out on DXY on the weekly time frame. So having that long-term perspective in mind, seeing this happen, so before price goes up, you want to see price go down first to take out liquidity at some point. So now price tapped into this liquidity Friday's low, very significant, and then in here on the 15-minute time frame, you can just scroll over to the 15-minute time frame. I saw my setup on DXY. I saw a setup on DXY. So after liquidity grab, after this liquidity has been grabbed, you want to see a huge displacement candles like this breaking market structure. So if I want to mark that out, this was the break of market structure for me. This was a break of market structure for me. And I keep saying, what signifies a valid break of market structure? First, the structure broken was tapped into a fair value gap. So this high here tapped into this fair value gap, making it an intermediate term high. And this high was the last high before the grab of liquidity. So that being violated gives me a sign that the market is going to reverse. So after the grab of liquidity, what else do you see? I spotted out my fair value gaps where I could be taking my entries from. So I spotted out a fair value gap, and then the SL is definitely going to always be on the first candle that formed the fair value gap. So this was basically the setup that I saw, and it was inside of London. You can see this London indicator, this indicator that I have here. And if you want to have this indicator, you can just come here, indicators, and then you search for ICT Zone, and then you want to use this is the indicator. This is the indicator that I'm using right there. That's the indicator, the one with tradinator at some point. So that's the indicator there right there. So this happened during London session. This happened during London Q zone. So it was a very valid setup for me. So now this was the setup that formed on DXY. Remember, I don't trade DXY. So what happens on DXY is, this is what happens when DXY is giving a setup like this, a bullish setup, that means EURUSD will be giving a bearish setup. That's just the cheat code. When DXY is going bullish, EURUSD is doing exactly the opposite of this whole thing, because DXY is just more like a basket where 5 currency pairs, I think 5 or 6 currency pairs comes together and then they form DXY, just like Nasdaq comes together to form the Fortune 500 companies in US, that's tech companies that's being merged together to give you Nasdaq at some point. This is how DXY meshed together to give you EURUSD, GBPUSD, JPY, you understand, and other pairs. Now EURUSD has 50% of this, so it's going to move in opposite correlation. So that makes EURUSD move in opposite correlation with DXY. So when I saw this setup on DXY, I had to scale to M15 on EURUSD to look for lower setup like this to take my trade. When I came to EURUSD, exactly, you've seen me marking this out already. So this is Friday. Remember, DXY literally grabbed Friday's low. In here, EURUSD grabbed Friday's high. After grabbing Friday's high, it did what? It dropped down. Now, let me zoom in for you. Let me zoom in for you to see that. Let me zoom in for you to see that. Let me zoom in for you to see that. So you can see that after price grabbed Friday's high, it dropped down to do what? To break market structure. And also look to the left of the break of market structure. You can see that price tapped into what? A fair value gap. So that's very, very valid for me. And it was the last structure before the grab of liquidity. So the same thing with DXY. So that's price breaking the structure. But see what happened. There was no fair value gap in here. So you can see that the DXY presented after grabbing Friday's low, it went high, broke market structure, and then there was a fair value gap in here. So there was no fair value gap in here. So what did I do instead? Just what you would want to do. If you don't see a fair value gap on this time frame, you want to go to the 5-minute time frame. You want to start scaling lower to see to start hunting for fair value gap. So this was the 5-minute time frame, and on the 5-minute time frame, as usual, when you want to scale lower to look for your fair value gaps like that, I spotted out a fair value gap on the 5-minute time frame, and this was the fair value gap, and that was my entry on EURUSD yesterday. That was the trade that I took on EURUSD yesterday. Let me zoom that in for you to see that that is a significant fair value gap and a gap in market price. Let me take it out. You can see the gap in there. Let me change this to arrow. You can see the gap in here, the high of this candle and the low of this candle. So that space in there was the gap that I saw on M5, and that triggered me to take my trade again. So that was the fair value gap that I took the trade from. And where do you think my stop loss is going to be? Now this is a whole lot of wick. This is a very long wick, but regardless, I still had to take it, because if you measure that wick, if you measure my entry from here, which was from here down to where the wick was, it's not even up to 6 pips. You can see 5.5 is not even up to 6 pips. So you can see that it was a very good setup in there. So that was the setup that I took, and then this was just it. My entry was here, and my stop was basically above here. So I was basically targeting where did I target? Now the first place I want to target for my partials would be the first area that price reversed from to go tap into the fair value gap. That's just like one of my plans. This is where I took partials from, first partials, and where I wanted to take my TP was going to be this Asian lows. This is Asian range. So this Asian low is where I was targeting for my full TP yesterday. You understand me? So if you mark that out, you can see that price literally went to smash TP. But I'll just walk you through on what happened in price and how I was looking at price as price was going lower. So this was a trade setup, and it was a cool 1 to 4 risk to reward on that particular setup. It was a cool 1 to 4. So you can see that price literally tapped into my 5-minute fair value gap, gave me a little bit of drawdown, but it didn't go for my SL then. went lower. First, I took my partial profit here. After price came down, London was over. I was still holding on to price. Now, what happened? I didn't stay on my chart during all these times, because look at what happened. This is why you don't want to start trading after London session. This is what happens after London session. So all these things, I didn't want to look at it. And then during New York session, I had resumed looking for more possible place my trades could react from. So here, this is what I saw. This was before New York. This is what I saw on the 15-minute time frame. As price was reversing up, this is how I internalized price, because after taking my partials, my stop loss was at break even. So this was how I was looking at price. I went to the 15-minute time frame, you get me? So I went to the 15-minute time frame, and what did I see on the 15-minute time frame? And what did I see on the 15-minute time frame? Let me take this out. What did I see on the 15-minute time frame? A fair value gap, a gap in here. So I saw that gap, and I was like, okay, if price wants to reverse higher, or if price wants to continue this bearish move, this fair value gap should be the last point of defense for this trade. It shouldn't come back to break even at some point. So I want to see price drop from here and smash my TP. And that is what happened during New York session. We saw price drop lower, and price came for the TP. So that was a cool 1:4 trade. That was a cool 1:4 that I had there on EURUSD, using the idea right from this pair, you get me? So this is the target that I had for DXY. But currently, see what's happening. DXY has not met that target. You see, DXY has basically not met that target already. EURUSD had grabbed its low already. So, but there is potential for EURUSD to go lower. And where am I looking at for EURUSD to go lower to? I'm looking at Friday's lows. I'm looking at Friday's lows and attacking Friday's lows. And also, if you want to look at for more opportunities, you can just take out your feed tool, and then you measure from here to this range, and then you can see that this is a fair value gap. This is a gap in here. This is a gap in here below discount. You understand me? So this is a gap in here below discount. So this could be used as a target point in EURUSD. You understand me? This could be used as from here to here. It could just be a little bit of scalps and target point for EURUSD. But generally, since I'm long-term bearish on EURUSD and long-term bullish on DXY, I would love to see Friday's low being tapped again. So this was the trade setup that I took on EURUSD. I think I'm going to attach the main trade on my NT5 somewhere on this video, and you're going to see the trade setup that I took. And this was the execution that I took on EURUSD yesterday, Monday. So I hope I explained, I touched a little bit of concept that you might use for your own trade setup, most especially for you to know a value break of market structure. Understand me? So if you love content like this, if you love trade reviews of me doing trade reviews of trades that I've taken, and you want me to keep doing it, you can just go in the comment section and let me know. Let me see if I can be doing this sort of videos for you. Understand? So do well to subscribe to my channel. Do well to click on the like button too, so that other people might get to see this video and also probably discover me at some point. So yeah, this is the idea that I had on EURUSD, and hopefully you can literally use the same idea to frame your trades starting from the DXY. So until I talk to you guys next time, peace out.